I noticed something as I was reviewing this video in preparations of publishing it. And so let me clean up this chart a little bit and then I will show you what I saw. And I think that it will become obvious to you. We've got a, let me make that horse, there we go. So this is it's a little bit sloppy to be a double top, but there is, let's call it a double top, for lack of a anything better to call it. And let's go back to our Andrews pitchfork. And so what we had drawn before, oh, I didn't turn my magnet on. Let me turn my magnet on. There's that. And we want our fork to be blue because we're doing a bullish move, upward sloping, and we want a regular Andrews pitchfork. There we go. And let me get on those pivot points. And so we're drawing our Andrews pitchfork on three major price pivot points. And so that's what we've got right there. Um, and then so that's what we were looking at in the previous video, and I was saying, well, I don't really like this action down here. But then I was noticing, well, this price structure here, that's really a double top. And so maybe in this case, well, that's not much better, is it? maybe let me continue with my thought. Maybe in this case, we'll ignore the fact that we got these spike highs, and we'll treat this high in that's October, mid-October of 2012. We'll treat that as the pivot point for our fork, and then let's get that orange origin there. So we still have the same issue. So this, when we're drawing pitchforks, having price drop beneath the median line like this is, not only is it not ideal, it kind of invalidates, in my mind, it invalidates the that whole fork. Just for curiosity's sake, let's go look at the Modified-schiff version of this pitchfork. And so we can see here, the Mod-schiff pitchfork basically gives us horizontal price lines, price levels, and coincidentally, it just in this case happens to line up with what we had labeled as a double top. And so, and we can see, is this just a coincidence? I think not. I prefer to think not. That when you see price doing that around the median line of a shift fork, that whether it's an Andrews schiff, a Modified-schiff, or a regular schiff, that's not just a coincidence. Believe what you want to believe. After you've drawn thousands of pitchforks and thousands of charts, then let's have a conversation. Um, so anyway, that's the mod shift. Let's look at, so shift fork is, you hardly tell any difference. So whether we're talking about a shift, mod shift, in this case, they're essentially the same thing. We get a horizontal price line, and I don't know why we're on our monthly chart and I'm drawn to go look at the MACD. Well, um, so folks, yeah, if you're a conservative long-term investor, um, one of the things you might be looking at is, okay, MACD, what's it telling me, just as a uh, point of reference. So MACD is not a bounded indicator, so it can go beyond 100, it can go below it can go below negative 100. There are no bounds on MACD, but typically what we find is that previous highs and lows in MACD tend to act as support and resistance levels. And so in this case, this is our MACD indicator that we're talking about here. Let me draw another line here quick. So although MACD can move higher beyond this horizontal line that I've drawn, if we were betting money, if you and I were in the back alley rolling dice, betting 20s or, hundreds, whatever, Ben Franklin's, whatever denomination you care to bet, me personally, I'd be betting that about up in here, price is going to run into resistance. It's going to run out of energy in the monthly time frame, and it's going to do something different at that point. And so that's just me. And then on the other end, once price reverses and does a correction, when MACD gets back down here, and now you're saying, hey, Brian, where you want to bet your money? Well, if MACD is down here, I'm going to be trying to get you to take my money with longs, with odds that price is about to turn back higher, because probability says at either of these extremes, price is likely to run out of energy and reverse and go in the opposite direction from what it was doing previously. Uh, Let me make a final point on MACD before we move on. So when we're looking at the MACD indicator, first thing we look at is where is the MACD indicator, the orange line here, the signal line, where is it relative to the blue line, the MACD moving average? And I think I got those backwards. I have a tendency to flip-flop those two. Shorter period average. When both of the signals are above zero, the MACD indicator is in bull mode. If both of these signals, the blue line and the orange line, are below zero, they are in bearish mode. And so just at a gross level, and again, lazy, conservative, whatever label you want to use, we can use the MACD as a very gross level indicator of which side of this market do I want to be on at this particular moment. And what we're seeing here in gold, in spades, I want to be on the bull side. MACD is hard on into bull mode. Both lines of the MACD indicator are above the zero line, both in bull mode. And then as the second level of information we get out of MACD, when we get a MACD crossover. And so that's what occurred back here in February of 19 on the monthly. Remember, we're on a very high, we're on a monthly time frame. We got a MACD crossover. And so for a MACD trader, someone who is using the MACD as a trading strategy, an investment strategy, that's a buy signal back in February of 19. Let's go long the gold market based on this buy signal in MACD. And so let's now clear that chart. And again, I am going to pause this I'm going to stop this video as another good stopping point.